Hi everyone, David here from Mortgage Choice. So finally some good news. We've had a rate cut of 25 basis points, which brings us down from 4.35% on that cash rate to 4.1%. So I'm very glad to be back there and hopefully it continues. Now, as always, I'm going to talk about what's happening in the market with first home buyers, with investors. Let me just shrink myself down a little bit there. First home buyers, investors, and what we're seeing in the market. But I'm going to start firstly with what this rate cut actually means for you. So in terms of the RBA's announcement, they've stated that, let me shrink this down a little bit further. They were happy to provide the cut. Move this up here. They're happy to provide the cut because they can see that the changes that they've made are working. The little bit of this policy restrictiveness in the decision today, the board is acknowledging the progress that has been made, but it is still cautious about the outlook. And this is kind of the sentiment that they've maintained throughout the past 18 months, if that. And I imagine it will be the same. They might make decisions, but again, kind of reiterate that they're not sure where things will land, which kind of gives them an escape to increase and decrease as they see fit, but hopefully continue to decrease. So that's essentially the gist. They're happy to provide a little bit of relief for us, considering how far we've come, but they're not sure if it's going to work just yet. We need some time. Now, what rate cuts mean to you? This is the most important part, right? I've put a little bit of an example here. Now, interest rates will fluctuate between home loans and investment rates. And is your loan to value ratio at 80% or 60 or 90? But this is a bit of an idea. So interest rates right now, roughly for a home loan, are sitting at 6.2, roughly. So $100,000, that gives you a repayment of $613 a month. Dropping this rate cut by 25 basis points would bring you down to 5.95. And on that same $100,000, you're saving $16 a month on a repayment. So on $600,000 or just over, that's $100 a month that you'd be saving on your repayment. So a very welcome drop, that's for sure. Now, what you might find is that your lender will cut interest rates now or in the next couple of weeks, but it might not change your repayment for a couple of months. And that's just because it does take their system's time for the changes to take effect. So don't worry, the interest rate will reduce quickly. It's just the repayment that might take a little while to kind of flow on. What are we expecting in future? We are expecting some cuts. This graph here that you're looking at, this chart, this is public knowledge. You can go onto the RBA site, the ASX site, sorry, and find the same thing. So this is the ASX's prediction of where rates will move over the next 18 months. We're expecting them to go down. And as you can see, we're looking at a rather steady decline for the next 6 months or so. Hopefully this follows suit. It does change every day or every couple of days. So we'll see what happens, but we are expecting some more cuts to come our way, which is fantastic. Everybody's looking for it. The one thing, which I'm not going to talk about too much because we'll need to wait and see, but the one thing to keep in mind if you're purchasing is that rate cuts increase borrowing capacity. And higher borrowing capacity could mean that people are willing to put in higher offers on properties. It could mean that whilst your capacity is also higher, your deposit might not allow for your higher purchase price. It could mean that there is more competition in the market. So what happens to the market because of this rate cut, we're yet to see, but there's a general consensus that as rates drop, property prices will increase. So we'll have to see what happens there. Now, first home buyers, I'll move my face again. First home buyers, I'm still seeing quite a lot of the home guarantee scheme, which is the government incentive for the government to be a guarantor rather than a parent to be a guarantor. It's a fantastic scheme that allows so many first home buyers to get into the market with a low 5% deposit. So still plenty of spots available. Pre-approval and finding is more important than ever. So many agents are requesting to see pre-approval letters before they're willing to accept an offer and take that to the vendor, especially for first home buyers. So having it in place is just an added benefit. It shows that you've already been assessed, that your offer is genuine, and it doesn't take very long to put in place. So highly recommend pre-approvals for first home buyers. Upgraders, funnily enough, I'm actually seeing downsizing. I'm seeing a lot of clients these days looking to downsize their property. They've sold or they're considering selling their house and moving to something a little bit smaller, or maybe something that suits their lifestyle a little bit better now that the kids have left the nest. So that's been really interesting. What I am finding though is that not as many people as I was expecting, at least, understand how to go about downsizing. Do they sell first? Do they purchase first? How do they access the deposit for the purchase? And that's something that we talk about and make sure that it all aligns with their goals. Most importantly, though, when people are downsizing, they typically want to reduce the size of their property, but they also want to reduce the size of their mortgage. And so we want to make sure that that's actually going to happen, and that the new repayments will align with their goals to repay the debt in 5 years, 10 years, whatever it may be. We want to make sure that everything's going to work the way that they're expecting. So really important to speak to your broker about downsizing or upgrading before you go in and sell or even look to purchase, to make sure that all of those ducks are lined up in a row. Investors, I'm not actually seeing too many investors entering the market right now. With the cost and with the higher holding costs, especially over this past 12 to 18 months, I'm actually seeing more investors looking to refinance or looking to free up some cash to continue holding on to their investment properties, maybe consolidating debt, which frees up some cash flow to help maintain the investment, but not so much purchasing, more just maintaining and holding what they've already got. I have seen, not as frequently, but I have also seen a few investors looking to sell and speaking with their accountants about what that sale will look like, because you've got capital gains taxes to pay. What do you do with the profits? Do you pay your home loan down? Do you use that as a deposit to a new property that might be better geared for you? Do you just purchase another property for the sake of having another one in the market and keep a hold of that? So it feels like there's a little bit more nervousness on the investors' side. Whether this rate cut is enough to change that or not, we'll see. Right now, I'm seeing a bit of nervousness in terms of the investor space, so we'll keep an eye on that. But that pretty much sums up the video for this announcement. I hope you've enjoyed it. I hope that the repayment details in particular have sort of really helped you. And of course, as always, reach out if you've got any questions. Happy to help. All right, we'll speak soon.